How to lower taxes for high income earners. I love this one because these are the people we target because we can help you like that. So number one, you got to understand the difference between being an employee and being an entrepreneur. So as a high income earner, you don't have a lot of access to the tax code. So the second thing I'm going to talk about is the tax code. What do you have access to staying an employee only versus adding an entrepreneur or investing other corporate strategies to your overall plan? And then last, what to do and what to not do when you're making more than 250. I'm going to say even 150, even 100. If you're making 75 or more, you activate some of the highest tax problems in the United States. So I'm not saying don't be a high income earner. What do you do about it? So let's get going. So first of all, when I look at someone who's a high income earner, right, and I call that anybody who has over $75,000 a year is actually high income. 95,000 and more puts you into the top 25% of income earners in the country. And this is US statistics. So when you're in the hundreds, 200s, you're those high income earners that when they're talking about let's tax the rich, they're talking about those guys. They're not talking about the multimillionaires who make money inside their companies. Because here's the difference. When you make money as an employee, Kiyosaki in the Rich Dad Poor Dad book has a graph. It's just a little square on one of the pages. It said you pick the way you pay tax. So you make it as an employee. You get taxed to pieces. This is a worldwide problem. You make it because it's a job. You get taxed to pieces. Then you get to live on what's left. Most people call that discretionary income and don't do much with it. The other way that you get taxed, which is a choice, is to be a company. In America, they're called S Corps, LLCs, limited partnerships, or C Corps. So your company makes the money that activates 81,000 pages, going to 83 with the big, beautiful bill, of tax deductions and tax strategies you can use. And then you pay tax. So why not make it deduct what are legal business expenses and then pay tax versus make it pay tax and then live on it? So your choice. Now, can you have both? Absolutely. And this is the video for you. So here's how you have both. First of all, a lot of you are W-2 because that's how they just offered you a job. Have you gone back to them and said, right, and I would coach you through this, I want my company paid, not me. Does it sound better to say I make $250,000 in a job or I have a company that makes $250,000? You know the answer. Having a company, I'm a CEO that makes more than $250,000. Now, what used to be personal expenses can legally move over to business deductions. Not all of them, but a lot of them. So you don't get to activate that. And if you stay in sole proprietor land, you didn't do anything different for yourself. That's about 8 to 30 maybe deductions you can take. Very small list, but still everything's operating under your Social Security number. Problem with that, it gives you only one credit score. When you have company, you have all these different lines of credits that you can get, like actual credit cards. So you have personal and Social Security number, then you have tax ID numbers under company. Now you could have 2, 3, 4 lines of credit, access to more funding, access to more capital. Many of you say, well, I don't know what to do with it. Well, probably invest it would be the smart thing to do, not go buy a bunch of stuff. We're not stuff people, we're investment people. So first, if you can shift your salary to being paid into a company. If you can't, then what the company's going to do has to have a legal reason to make money. So what is that cash machine, as we call it? What's that business going to be? So you'll have an employee, a job, and maybe your family starts a business. I have families that do kids' parties and games where they bring equipment around on the weekend, those jumpy jump things. I have a brand new client who's got a cool van that's got all sorts of video, like basically a video arcade that drives up and you basically have a birthday party inside of a van with a bunch of arcade stuff. There's so many ways you can make money. You could do video content. You could, if you're a good writer and journalist, actually do editing for people. There's so much copy that's needed given everybody's on the internet now, and copy's usually horribly written. If you are good at photography, be a photographer. Like, we don't care what you do, but you have to have a legal reason to make money, to activate the tax code out of that company. And then the tax code, let's talk about it. As an employee, you don't get any deductions. You can't deduct your phone. You can't deduct your vehicle. You can't deduct any rent or office because you don't have an office. You have nothing to do. So I'm talking even the basics of deductions can't happen if you were just an employee. So we advocate for you being both and ideally moving towards being that entrepreneur if that's the way that makes sense for you. So we're not saying go quit your job. We're saying add a corporate structure to your life and let us help coach you into how to be an entrepreneur, how to get that up, and how to activate the greatest tax code. We have some of the greatest tax teams in the country that will help you get into that even single digit, if not teens, of paying taxes. And some of you say, well, that's not possible. It is. High strategy in 1 to 3 years will get you there. But you have to begin and you got to start now. So at any point, if you want, call our office, ask for a gap analysis, say, I want to talk to somebody about how I can take my big W-2, So that's 75,000 or more, even at 50,000, I start looking at this. I mean, I started corporate life when I was in my teens. So I've been living this my whole life. Would I know how to just live as an employee? Because that's a too high tax way to live. The deductions are enormous and you can't activate them unless you have a company. So again, call our office, get a gap analysis, talk to our team. And if you have any questions, go to Ask Loral, AskLoral. But before we do all that, immediately I want you to subscribe to this channel. You're here watching, but you click the notification button if you haven't. So every morning, 5 days a week, you get a video saying, hello, this is a new topic for the day. If there's a topic you don't see, put it in the comment section below and we'll get out here and do another video for you. I'm video recording for you multiple times during the month to make sure we answer the questions and the topics that you have as they come up. Now, last thing is, how do high income earners pay less tax? So you got to live that corporate life. So to start off this last section, I want to give you a gift, 2 tickets to our Millionaire Intensive. We do it once a month, where I want you deeply understanding what it means to live corporate life. You can have that employee job, but the company that you have allows deductions. And how do you put multiple companies together to pull all that tax burden down? And then how do you invest? So we don't call it budgeting when you get into corporate structure. We call it forecasting. See, what happens to most of you, and the reason you overpay tax as well, is your CPA is a historian. All they're doing is recording your history and giving you back a tax bill, versus have a strategist, and we have strategists. So they're looking at, what are you doing forward? What are you going to make this year? And then every quarter you start pacing if you're going to make 100, 200, $1 million. And then how do you forecast forward in spending that money so you're spending into the right business deductions to give you the best tax strategy? It's very, very purposefully done. And most of you, you just pay the invisible pain called taxes, and you don't have to pay that much. Here's the math equation. For every $10,000 a month that you pay extra for 20 years, you've just paid the IRS $1.1 million versus pay it to yourself, because I'm going to say you were lazy. You didn't get off your rear and say, I'm going to take the lead in this. A lot of social sites, this bathroom wall called the internet, it will tell you how scary taxes are and how complicated they are. And then they'll have a whole bunch that say, oh, it's just easy. Just do it yourself on TurboTax. Really? We don't do TurboTax. We don't do H&R Block. We don't do any of that. You have to have a strategist, a brain, highly trained. Our strategists have gone to school as long as most of your surgeons have gone to school. You don't do your own surgery, so stop doing your own taxes. Critical. If you want your taxes down, you're a high income earner, go to askloral.com, ask a question, make a request, call our office, and let us help you today.